Okay, testing 1 2 1 2. Let me make sure you can hear me, everyone. Hi, everyone. Welcome to the Pro Trade Room Plus and the FOMC meeting minutes. My name is Lee Goldstein. I'm the trading director for 10-minute trades. Please remember that all the trades we discuss are for educational purposes. It is possible to lose money trading futures, so trade carefully, please. And let's get started. Okay, everyone. So we are here for the FOMC minutes. And let's talk a little bit about what's been going on with the setups for it. Um, I'm sure everybody knows that sometimes you just go through periods where things don't have a large impact, or a news report comes out and lots of things, lots of instruments usually move, and then sometimes things change. So what's going on with the FOMC minutes is I think they are definitely changing. So also, before we get fully started, we also do want to welcome everybody who's watching us on YouTube. This is our stream of the week. So thank you for joining us on YouTube. If you'd be kind enough to hit the like button, that would be very nice. We'd appreciate it. And if you press the notification bell, you'll know the next time that we're going to be here streaming. We stream once a week. So thanks for joining with us. So we've had a couple of different setups for the FOMC minutes. And we actually were going to take time off from the report. It had been responding rather poorly. And it's unfortunate, but it seems like it's gone into a lull. So let me just show you what I'm talking about. First of all, we do have a DMM. Okay, we do have a daily trade setup for it. But that doesn't automatically mean you just go off your rocker and start trading it, with tons of contracts, trading huge amounts of money. That's not what we recommend. You have to really pay attention to whether or not an event is returning a profit. That's the big deal. We need to get a profit, or you can watch. You don't have to automatically trade a lot of money when an event is not doing anything. And look what's been going on. So we've had 3 trap trades in a row with no fill. So I'm not trading the trap trade today because I don't anticipate anything much happening, to be honest. That's the truth. We could test the trap trade with MES. In other words, it normally was an ES setup. When you get a situation where your setup's not working, you have to either take a break for a month or two, look for another setup. Now, the problem is we have an alternate setup, and the alternate setup has not been trading all that well either. Trading the NQ with an 18 tick bracket, none of these setups at the moment have returned a lot of profit. So, every now and then we'll get reports that we just have to take a break from. It's just what happens. It's not that we've done anything wrong. It's not that we're not willing to do our homework. This is what happens. Sometimes events change. But the real truth is the FOMC minutes have never been a fantastic setup. Now, we like trading the statement, the FOMC statement has been much more tradable for us. We've had a very good setup, and it's because the statement tends to be more consistent in the way that it responds to the news. So that's the key element when we're trading events. We want consistency from the event. All right. So let me show you what I'm talking about, just to give you an idea. So we record most of our events. So here's a recording of last month's FOMC minutes. And you'll just see it was very quiet. And we have a methodology for checking that our trade is safe to take. And frankly, our trap trade is not very big already because the moves were getting smaller month after month. I mean, 15 ticks in April, 16 ticks in May. Those are almost the same. So just not big spikes from the report. That's been part of the issue. So we were trading the trap trade. I happen to have a video inside a video of the April report. And that was the first recent report that got canceled. So why does a trade get canceled? So the idea of a trap trade is we put two sets of orders above and below the price. Okay. Two sets of orders above and below the price. And if the market goes up, we sell the market. If the market goes down, we buy the market. All right. If the market does nothing like it did in April, we cancel the trade. There's nothing else you can do about it. So April was a canceled trade. And then here we have July. This was last month. And we had a simple trap trade. It's not complicated to set up a trap. And we were just using one tier, a 30 tick tier, which is not all that much on a report such as an FOMC minute report. You'd expect you should easily be able to get 30 ticks, but you could see the move was minuscule. It was tiny. It was tiny. There just was not, certainly initially, it was a pretty minimal move, pretty minimal move. Now, there was a little bit better activity from the NQ, but even still, the NQ did not do a great follow through. You could see it totally flipped around. The ES was a cancel. So that was two out of the last three ES cancels. And then if you look at May, which would be the trifecta, May was a cancel as well because it just failed to move the market. It only moved 15 ticks. So at the moment, we're not feeling very bullish on the trap trade, and the NQ trade at best has been very, very inconsistent. So it's unfortunate, this is a report that I really normally under normal conditions, I like to trade it for dramatic, potentially big profits. But if we go and understand the history of this report has had a history of underperformance. And I just have spent years, literally spent years trying to find a great setup for this report that would give us good returns, and we just haven't been able to do it. That's the shame, but it is what it is. So, we have a saying at our company that's very important, and we want to trade the reports that give us the best opportunity for profit. So that means something very important. That means that it needs to be a report that reacts to the news consistently. If it's inconsistent, by definition, you're not getting a report that gives you an opportunity for profit, because one month it'll be a trap trade, the next month it'll be a breakout trade, maybe the next month it'll be good with gold, maybe the month after it'll be good with the ES. That's the definition of inconsistent. So when you get that inconsistency, you just have to take a break. Nothing else you can do. So we could set up our two trades, and basically I would not trade them live today because the risk is just too high because it hasn't been responding to these setups. So that's the reality that we're dealing with. It doesn't always make sense to automatically, just because a report isn't working, it doesn't mean that you then automatically, well, I'm going to trade micros because if I lose, I'm going to lose less money. I don't think that always makes sense as a methodology, right? The methodology ultimately should be, well, I want to trade the report because it gives me an opportunity to make money. And if you're going to trade full size contracts or micros, that should be an offshoot based on whether or not you think the report's going to make you money. Also, yes, sometimes there are instances where you may want to know if a report is working. You might want to take less risk to find that out, but you need to run a live trade. In that case, it's fine to trade micros, but we don't need to know if these setups necessarily work or not. We know that they haven't been working. It's just what's going on right now with FOMC minutes. It doesn't mean there can't be a great move today. There could still be a great move because that's what happens. Sometimes you go through a period where there's no movement, and then all of a sudden everything comes back and it trades great. So so here's what I would do today. Basically, I just have to go into a watch mode today because, look, we've been generally making money steadily over the past month and a half. And we've been making money steadily over the past month and a half because we've really been carefully picking our battles. We've been trying to pick the best of the best, with some extra reports thrown in for good measure as well. But we've been trying to stick with reports that are giving us a good opportunity. So I don't mind sticking to that mantra, but I don't mind, we can certainly set up the events, the two DMM setups. So the first setup that we could look at would be the NQ 0923. And that setup is a breakout. So we use our software to enter the trade in. The trade type is a breakout, and then I would enter the trade at 13:59. It's a 2 o'clock event. That's when the report comes out. We have a bracket of 18 ticks. And I would use two positions, and my first target would be 10 ticks. My second target would be 30 ticks. Actually, I'll go for 12 ticks on my first target, 28 ticks on my second target, and we have a stop of 25 ticks. The key is the bracket is 18 ticks. It should keep us safe. And the stop is 25 ticks. Which would be a winner today, Calvin? You mean the breakout versus the trap? Breakout versus the trap? Is that what you're saying? Is that what you're asking? Which method will be a winner today? You want me to pick? Okay, so I think the trap has the smallest probability because it's been moving small, pretty small. And I think that it's a tough one. It's a tough one. This has never really been a report to get good gold and good bond movement. So I have to say the NQ, I think the NQ breakout has the best shot. But you're talking about $250 in risk, $25, 25 ticks per contract if you trade two contracts. It's not an unreasonable MNQ. Exactly. That's what I was thinking too. I don't think it's terrible risk on the MNQ. And maybe I would trade, two or three contracts on my first target on the MNQ. So if it moves at all, maybe you could get a little bit of profit out of it. And I might go with a 30 tick stop. I don't think the stop is really the problem. I think it's whether or not there's going to be good movement and follow through. I think that's really been the issue. If we get good movement and follow through. So I've got an 18 bracket, targets of 12 and 28 with a stop of 25, but nothing really changes the situation that it hasn't been very impactful for 3 months. And prior to that, we were thinking of not even generating a DMM. That's how mediocre, unfortunately, this report's been behaving. So, sometimes you just don't have a lot of activity from an event, and there's not a lot you can do about it. But so we've got an NQ set up. You never know what's going to happen. Let's apply it. Let's check the bracket size. I would make the bracket size, make the time 0 so we can check the size. Now, the NQ is bullish right now in the sense that all of a sudden it started moving up, right? A little bit right as we got here, pretty much. The NQ decided it wanted to go up. That doesn't really change anything. There normally is going to be pre-trade volatility before this event. We see pre-trade volatility before every event sometimes. We had pre-trade volatility before NOPA yesterday, before the NOPA crush. So it's not unusual to see volatility before an event. We see it all the time. So that's our NQ. Our NQ is ready to go. And then on the ES, 923 is the contract. And we just haven't had a lot of excitement today trading. We've had a whole bunch of strange reports today. Today was just one of those days where I knew when I set up the trade rooms, it was a trade room filled with a day filled with weird reports. And that happens occasionally too. So our trap trade setup, we've got tiers of 22 and 31. All right, I'm going to actually take the lowest part of the tiers, 22 and 31. And I'll use an 18 stop to make up for my slightly smaller tiers. The time of the event is 1400 hours. Roger that, 1400 hours. And we've got activation prep is 5 seconds. And I've got one tier for 22 ticks, one tier for 31. I've got a stop of 18. All right. And I'm going to label it trap, even though we don't have to. So we've got the trap trade set up as well. The trap trade is going to put orders above and below the current price. And we are going to move in the opposite direction. If the market goes up, we would sell the market. If the market goes down, we buy the market, expecting a change in direction. And when that change in direction takes place, that's how we make our profit. Now, I'm gonna quickly save my templates because I want to do something. So I'm just gonna save FOMC minutes and today's date. And then I'm going to save my NQ trade also as a template. And the reason I'm doing this is I want to reset my account so it's set to 0, our SIM account. And it's going to remove my trades. You know, it's funny. It used to always remove the trades, and it's not doing it now. So let me just fix this real quick. All right, let me get that back. Let me bring back my trap trade. Two seconds, so we have FOMC minutes. $22 and 31, the time of the event is 1400. All right, so that trap trade is set. And then we'll get our NQ breakout, grab that template, load it. I know I called it NQ, which is not the best name, but that's okay for today. Okay, so our NQ is an 18 bracket, targets of 12 and 28 with a stop of 25. That's our NQ setup. And I think I'm going to just double check my brackets, and then we'll check our time like we always do. I'm actually totally shocked that anybody in their right mind can be thinking that the Fed is going to cut. It makes me absolutely crazy that people are talking about rate cuts. It's illogical, and it's absolutely incredibly foolish. If anything, I don't think there's any chance ever that the Fed's going to get to 2%, number one. The Fed target rate is completely off the wall. Everyone knows the Fed can't get inflation to 2% ever again. In the next year, certainly, that's not going to happen. And for anybody to think that there's going to be 2%, the Fed needs to come out and just admit that they screwed up. They don't even have to say they screwed up. They should just admit that their target rate is too low. They cannot get inflation to 2%. It's not possible. It's not going to be possible. And yet they still are, existing under this charade that 2% is a meaningful number. It's just not possible. They would have to literally destroy the economy to get everything down to 2%. It just can't happen. It cannot happen. It's an irrational number. Okay, so we've got a trap trade that's going to take place on the ES on the left. One very interesting thing about trap trades is a trap trade, whether it's live or simulated, shows very, very normal results because it's a trade that goes in the opposite direction from the market. So there tends to be very, very little slippage on most trap trades. So let's see what happens. NQ on the right, ES on the left. And then don't forget, everyone, we will be back. I think we are back, what, 3:45 for Cisco earnings. 3:45. Okay. So we've only got 2 minutes. Now on the trap trade, we can usually tell on this report if we're going to get a trap trade that's going to work. Usually there'll be a reasonable move pretty quickly in the market. Now look, maybe because this report's been so quiet. No, I'm not live on this, Calvin, because of the 3 cancels in a row on the trap and the NQ inconsistency. So I didn't forget. No. I'm sticking with our DNA these days, trading the reports that are going to give us great moves and reports that are going to give us good opportunity for profit. All right, we got 1 minute. 1 minute. So NQ breakout on the right. Of course, today will be an $80 million winner. Perfect explosion to another world, right? That's what always happens. All right, so we're watching 18 tick bracket on the NQ. It's not a very big bracket. Honestly, compared to the statement, it's minuscule. Now the NQ was perfect. That was a perfect trade. I think you would have made money, anybody that traded the NQ. I think you would have come real close to hitting both those targets. Real close on both those targets. Now, the ES, I would probably cancel that trade. I would probably cancel that ES trade. I'm not a lover of a dribble trade on this type of a report, on most trap trades. Okay. Now I'm going to watch it. But after a minute, I would probably cancel it. It's pretty much chopping around fairly close to where the price was 1 second before the news. The price was pretty close to where we are now, just a couple of points lower. We're just a couple of points lower. So I would let it go. I would let it go on the trap trade. Just didn't get a big enough move. Let's watch the video and see. The NQ looked quite tradable. It looked quite tradable. Did anyone trade the NQ today? Anyone trade the NQ? And how'd it do on your target, Sandra? How'd it do on your target? Now, if that was your fill along at 1549, well, the end, I didn't look at the MNQ. It could have been totally different than the NQ. So that's one issue that you always have to realize. They are two different instruments. They are two different instruments. And it did go down and then up also. It moved in multiple directions. The NQ did. NQ, no one else traded. Sander was it. Was Sander the only one? Sander the only one? That's it. Now the market is finding a direction down right at the moment. Not, I wouldn't say that this is dramatic yet at this point. Let's, it might become more dramatic. Right now the markets are only down 18 points. So let's take a look at the video. Now, I personally just keep in mind, because I have not liked this report, I did not trade it live. Okay. I was not trading this live because it has not been behaving, it has not been performing. So, FOMC, well, good. I'm happy to hear that, Steve. I don't want to hear that you got smoked and traded live, especially if I was not trading live because I was worried about the performance. So good, good, good. But it's interesting. Where was your fill? Where was your fill? 8:16:23. Let's look at the video. Let's look at the video. It looked like it was not too fast to get a decent fill, but let's look at it again. Let me make sure that I'm thinking correctly. Let's take a look at the video. All right, so here's the event we're looking at. 18 tick bracket on the NQ. Now, just watching the speed of that market, it was pretty fast, but I wish we had, if a lot of, David, I'll see you, if a lot of people traded live, we would have a much better sense whether or not it was a valid fill, whether the fills were valid. Just basing it on speed of the market, it seemed like a manageable trade regarding the speed of the market. You cannot always tell. That's not always, an honest appraisal. But we look at hundreds of trades, and that looked like it would fill and hit targets to me. Now on the MNQ, I really can't, I'm not, it's hard to imagine why you got filled long on that trade, honestly. Hang on one second. There was some sort of a correction in the news being made. I just was listening to hear what they were saying, but it didn't have anything to do with this report. Just looking at the MNQ on a smaller time frame. This is a 1 second chart on the MNQ. The first couple of seconds, you could see there was a very large, low liquidity wick, it looks like. But the reality is that this report has not been performing well. And if you decide to trade a report that isn't performing well, then it is adding extra risk. It's absolutely adding extra risk to a trade. So you have to keep that in mind. When a report's inconsistent, not performing, and you trade it live, you've made the decision to add risk to your trade. So you got to keep that in mind. It's very important. I want to thank everybody for watching us on YouTube. I hope you learned something. Every day is not automatically a trade. The idea is to trade when you have the best opportunity to make money. That's the times that we want to really pick our battles. If a report is not behaving, then we will take that report off without crying in a corner. I mean, that's the way we do it. So thanks for watching us on YouTube, and we'll see you next week for our free stream of the week.